Hello, and welcome to this buy-to-let and company vehicles for investment Pitfalls and Implication Explored webinar. My name is Andy Richins, most recently a Senior Policy Advisor to the government's Independent Office of Tax Simplification, pretty much from when the office was opened by the coalition government in 2010 through till when it was closed by the last Conservative government in 2022. Before that, I was a tax technical director at a mid-sized firm of accountants based in the Southwest, and I remain a member of the Tax Professional Forum, which advises the Exchequer Secretary to the Treasury on ways in which the tax policy should be delivered. So we may have one or two items to say on simplification and delivery of tax policy changes as we work our way through this webinar. So things we're going to be looking at on this one: buy-to-let and company vehicles, the pitfalls and implications, why the restriction of income tax relief on finance costs has increased interest in company vehicles for investment. So what we'll do is a little case study comparing an individual, or indeed a partnership, with that of a company vehicle, and we will compare the extraction from the business, individual versus company. Capital gains tax and SDLT charges and reliefs on incorporation. If the decision to incorporate is taken, then what are the tax consequences of going in? That's capital gains tax and stamp duty, land tax. And don't forget about exiting the company. There'll be capital gains tax issues then, known as the double tax charge. And we'll also have a look at the IHT latest on business property relief, specifically with buy-to-let businesses in mind. So with limited liability, if it is a company vehicle that is being thought of by their client, remember the normal commercial considerations of limited liability. That's an advantage, although the need of banks to provide personal guarantees from the directors may negate that. Other reasons for incorporation: succession and the continuity of the business following changes in directors. Credibility is a factor. Financing: it may be easier to get a floating charge over the assets of the company. And tax planning. Now, of course, this is a tax course, so inevitably I'm going to talk about the tax consequences of incorporation, but it shouldn't be tax alone. That's the only thing I will say at this point, and from now on I will be talking about the tax differences, advantages, pitfalls, implications of company vehicles for property investment.